was actually that one was just basically, I think I made like $2 or something. It was just to see, I was just trying to put on a position so I could see how everything was moving together, get a
Just
feel.
got it. All right, just the learning part of it. Yeah.
Yeah, it was not, there was no strategy behind that one. The only one that I actually that had intention behind it was the spy. And that's when I got in, got a put on the 296 strike, and that one would have actually played out well had I stayed in it. But um, once again, I was mostly doing it just for the learning purpose, but I also saw the setup as being decent.
Yeah, I was watching the spy for a while, and then
I got to put it that 290 that when it pushed up to the 3% deviation. Then you said that it can keep pushing, basically.
yeah. Yeah, look at this one drop down. Just probably took out everybody. Yeah. And that would be that's around the time the news came out about the sub. Interesting. But yeah, I don't remember where, but I was I was telling V, look for a push, and I don't remember where. Well, there's news the sub went down, but no, that's not the news. That release is going to come out, I believe, around 4 or after. And I can only tell you that I don't know if it's going to be. I don't know if it's going to be released or not, but if it's released, it's going to tank the market. So,
More time for studying.
yeah, yeah. The sub that went down, nobody's talking about that. That seems to be, yeah, obviously that's only a little tiny part of the news. Uh, Basically, if you remember, we lost one of our drones, and then the decision to strike was called off, and then the strike was actually a retaliation for the drone, and then and surprisingly, to be honest with you, I was surprised Trump didn't act on that because he actually bridled himself, which is amazing because I mean, his tweets drive me nuts, but uh, he bridled himself and then did a press thing where he said that it was 30 minutes before, you know, they were 30 minutes out, which right now we still hold 30 minutes out. And the idea was, or at least he had in his mind that we're going to kill 150 people for a drone, and he decided not to act. And that was kind of a surprise. I didn't expect, and I tend to think that maybe more showboating for the political scene. And that's just my own feeling on it. I think everybody's doing everything they can for politics. So
Didn't you say to get out of all long positions right now?
I think that would be a safe bet. Yeah, but that's my opinion. I got a couple calls, and then I heard that we were tipping between going DEFCON 4 from DEFCON 5, and some bases got locked down. And then 30 minutes later, some shots were fired at uh, a reserve base, and that's not been confirmed. And then 30 minutes later, then the guy in charge of Homeland Security was pulled out of a live broadcast on the news channel, on one of the news channels. In the middle of it, in the middle of talking, he got a call, and he said, "I'm sorry, I have to go," and he left right in the middle. And so you got a lot of crazy things happen. Then Putin got called back. The VP was called back, and then other members, both in the Senate and Congress, were called back to Washington. And between the calls that I got and all the information, it looks like we went ahead and did an airstrike. But I don't want to say what I was told we did. We'll just wait and see if it gets released or not, because I don't know. I don't know if it's going to be something that's held for a while for what you know how the government works. I mean, they could hold it for. They can only hold it for so long, and it will leak no matter what. I will tell you that they will not, if possible, disclose that and after the markets close, that type of thing, because that would just, I mean, that would knock the market down thousands of points, multiple thousands of points. The idea that we are going to retaliate against a country that's nuclear capable and who actually every day says death to America. So, yeah, it's a whole clusterfuck, is what it is. Yeah, see, there's no fear right now. Look at SPY go.
So I saw you talking earlier with Andy about the PPS study, and were you saying that we can't have the squeeze on while we have the PPS on, or what's the configuration supposed to be?
I'll show you. Let me 1 second here. Okay. Excuse me. All right. So if you look right here, I have the KM10 PPS, the cloud, the Bollinger Band, the price line, and the squeeze, and the vertical gap. So you can see I don't have yeah, I don't have the SCP up here because inside this scanner it does both, and I'll show you what I'm talking about. So right here you have two signals. One of these is the 10%, and one of these is the PPS. Okay, and so color wise, I'll show you. I'll show you the code so you can see. So color wise, when you're looking at it, you can see here. This is by PPS, and I know you guys aren't programmers, and this one is basically sell PPS, but the color is red for the sell of the PPS and green for the buy. So the lighter colors, when you look at them, so that's obviously green, so that's PPS, and that's red, that's PPS sell, PPS long. The cyan and the yellow are the 1090. It's basically 10% to the top or 10% to the bottom. So it's really the 10% indicator, but I like to say 1090 because the way I coded it, I range the candle from 0 to 100, and then I look at a percentage from the top or bottom. So anyway, yeah. So like these two signals right here in a squeeze. So what is often referred to as a squeeze, or I call it consolidation. You're in consolidation. You had two signals. You were near the bottom of the Bollinger Band. This was gold. This is the ETF. So this I shared with another person who actually got in. They actually got in here and they got out. They actually did better than I did, but I did get out on this one, and but he actually did much better. And then today he got back in here. I'm just getting everybody up to speed. I already talked to Chris about this. He he got in somewhere in here, and then he asked if 10 contracts was a safe number. And I said, well, hell, why not just go for 100? And he did. And so I think he got it in at 108 or something like that. And $1.08 is what I believe. Yeah, I don't remember. I'd have to go back and double check. I actually opened my email, but I didn't check. But anyway, oh, so you can see the signal changing on the PPS. So like I said, it's real time. It's not a lagging indicator. So you see that go on and off, and that's actually you know basically giving you an indicator real time. So it's a good indicator to use and to use it in conjunction with this one that I actually coded. Works really well. So you can take the same indicator, the KMM10 PPS, and you can use that as with the scanner. So, and the way you do it with the scanner is when you're referencing the scan, you can reference the call PPS, you can reference the put PPS directly, you can reference the call 10 or the put 10. So you can use those just like white dot, right? But you just say call 10 is true or put 10 is true. I mean, obviously they can't be both true. So if you're looking for both of them, you have to use or. So you'd say if call underscore 10 is true or put underscore 10 is true, right? Then that would work in the scan. So, but anyway, yeah, you have 4 different ones you can call here in a scan. So you have the white dot and this, and you can use any kind of combination of the two to do whatever you want. So you could have actually said, okay, a yellow bar, red dot, 4 red bars, which I've said this before. Uh, I prefer to see it further over, but regardless, I mean, it was still a good signal because you were near the bottom of the Bollinger Band. So you had the transition from red to yellow, which means the trend is up because this is going to be a smaller value than that. You have the red dot, which is the consolidation. And usually when you consolidate, whether matter of fact in MACD or anything, when you see consolidation, there's always an explosion after the fact, at the end of that consolidation period. So we have good consolidation here, which is the reason you have the red dots. The red dots probably started right about here, but the white dot overrode it and basically. And then if you can hear me, Andy, I'm not speaking English. I'm speaking Spanish today. Andy, can you hear me? Andy, habla español. Dígame, ¿cuál es tu problema, Andy? Okay, I guess he really can't connect. Sorry, Chris. Okay, so here, you can see you have the trend. Oh yeah, yeah. No, that ain't funny, man. Well, it is a little bit funny, but the crime here is I think I've told you guys I spent a lot of time in Mexico. I used to go to Adelitas in Hong Kong and Tijuana. Used to take the crew down there. Basically I would buy the bar, and I'd give the owner $10,000 and buy the bar, close the doors. And guys got the fuck all the girls they wanted. We had a blast. Anyway, so I've been all over in Mexico. I love some of the things in Mexico, and I certainly like real authentic Mexican food, which I cannot get here in Florida, which is pathetic. Mexican food here is a joke, absolute joke. No offense, Chris, but Cuban food is not Mexican food. Okay, like the sandwiches, but you know. Anyway, so uh, I've dealt with a lot of people. I mean, I know plenty of people that came through the border illegally, uh, and I'm not one of these foolish people that take on a political agenda all for the sake of a political agenda. I have a problem. I do have a problem. I'm just going to share this with you guys. I was living in West Covina, and in a period of 4 months, I watched with my own eyes two different killings, and both times on both killings, one of them was, I believe, I don't know for sure, but I believe he was with the M13 gang, and the other one was with the Lamaka or Lamana, which was a different gang. And I didn't even live in the gang area, but they come into the area to rip off the houses and to rip off people. And so it just seemed like to me the majority of the time, most of the immigrants that I met, have known, have worked with, I never had a problem with. But the problem is there is a problem here because there is a hell of a lot of them that are bad that do come up, and there is a shitload of drugs. I mean, I lost Armin Carboneo. He was a friend of mine. He was French Canuck. I went to school with him. I lost him to drugs. Okay. There was Bill Wilson. I lost him to drugs. There was Bill Reeves. I lost him, a friend, to drugs. And all of these guys bought drugs. Okay. And no question where these drugs came from. They came up through the border. And I've seen this over and over and over in my life. I mean, thank God I never went down that road. But it is a serious problem, and I think it's really tragic that everybody is making this a political thing. We have port of entry. My wife and me did the process. I mean, other people do the process. Those that get denied, there's the foundation to the denial. It's not just willy nilly. I don't think you deserve to be here. Bye, get out of here. It doesn't work that way. We have ports of entry all over the place. You don't have to cross a fucking river to get into the United States. You go to the port of entry, you do the paperwork. It's just that simple. And it's unbelievable what's happening because these children are suffering. And yeah, there's a lot of problems. Anyway, all right. Yeah, like I say, I, I worked with a lot of different races over my lifetime, and don't, and it's this is we all look, everybody's a racist or bigot to some extent because we all prefer our race over another race. Well, hell, I don't even know what my race is. I mean, I'm half Malachite Indian, but I don't look Indian at all, and I'm half Scot. Okay. Now, my brother, on the other hand, he don't look Scot at all. He looks like a Mexican, but that's from the Malachite Indian. So he kind of looks like an Asian Mexican, right? Because we got the little fat going on under our eyes, and his is really quite different than mine. So the Malachite Indian shows up in him really, really well, and or really poorly maybe because he doesn't like it. But anyway, so we do tend to have some internal preference, and that's just the way we're all wired. I don't think we have a choice about it. But as far as the politics today, the you know Republicans, the Democrats, I don't know. They both disgust me, and I mean, even my own party just disgusts me. Uh, I just the whole thing with politics is just uh, it's insanity. And now I've been to a lot of countries, and even with the insanity that we have, that balance between each side trying to fight for the right is the reason we haven't totally, gone communist or socialist yet. And it's that, thank God it's going to take time before we end up doing just like the Romans did. And, the Romans, the Congress and the Senate in Rome, they were having a lot of immigration problems a long time ago. And they passed legislation to allow immigration unabated. And then Rome disappeared within 125 years, pretty much. And it took 600 years for Rome to find their own sovereignty again. And aren't we doing the same thing in this country? That's kind of tragic. And it's not just about immigration. It's, if you have laws and you don't want to enforce the law because the byproduct is you get more votes, then why don't we just say, I don't want to enforce the laws because these people will vote for my party? Why don't people just say the truth? I mean, why hide? Why lie about it? Andy, I was doing a Spanish class today, informal Spanish. So I can do formal or informal, whatever you would like today. Hey, Chris, when you say strippers, when you're in Tijuana, it depends on what street you're on. Those could be guys dressed up like women that strip for you, or they could be the girls that actually strip for you. No, Ronnie, $10, $10 and $12 for the room. You don't have to have a lot of money. Yeah, it's crazy. And and I'm not trying to promote this stuff, but I wanted to tell you one thing. Tijuana years ago, as an example, had the Catholic Church crack down on them, and they abandoned the legal prostitution. They don't have illegal prostitution there; they have legalized prostitution. Catholic Church cracked down, and the governor, the mayor, everybody said, "Okay, fine." They stopped it. Domestic violence went up. It was at the lowest it went up in 1 year was 600%, and the maximum was around 1,200%. That's domestic violence went crazy, and there was people didn't understand that, right? And how is this related with prostitution? It, I know this is an odd topic to talk about, but anyway, yeah, maybe that's it. But anyway, so then all of a sudden they decided to bring it back, and within a year, domestic violence was back to where it was. Yeah, so when you go to a place like Tijuana, not in Mexico, not Mexicali or places like that, but you go to a place like Tijuana, and they have legalized 2,000 girls, and they go to the doctors, they go through all the tests, and you don't. It's not like going and picking up a girl. It's easier to go pick up a girl, in my opinion, than it is to go buy one. Because when you go buy one, it's like being treated by your doctor because she's gonna hold a ball up there, she's gonna wash your nut sack. This is not fun. Okay, but when I would take a whole bunch of guys down there that can't even get pussy on their own, they were happy to get pussy any way they could. So Tijuana served a purpose for a lot of guys that have trouble getting girls. But anyway, um, yeah. So I spent a lot of time. I did a lot of work in Mexico City for Gruma, Bmar, for Bimbo, Tecno Maíz. They did a lot of flour tortilla presses, and they did a lot of work in Mexico. And part of it is as of course I speak the uh, Mexican dialect of Spanish, which is a little bit different than formal Spanish, and that helped everybody when they know how to do troubleshooting or work on something down there. But anyway, I don't have an outline today. I wanted to maybe just reiterate on a few of the things that we've already talked about, uh, and have you guys throw anything up that I've said that I would uh, talk about that I haven't talked about. And then I also want to talk about the OSB was brought up in the room a little while ago about the OSB recordings. And I'm going to give you an example of why this is important. All right, I'm going to use Disney as an example. All right, so I was explaining to Chris, if we look, yeah, I'm going to do it the same way. So just bear with me 1 second here while I do this. Andy, is that Gellick? Andy, I don't know if you know what you typed. Are you trying? Are you trying to tell me
You're
something?
trying to.
Well, let me actually show you.
Okay, let me actually say,
And you might want to go
and you
into
might want to
the
go into the
Google thing.
Google thing.
Hello.
Hello.
Okay.
Okay.
Yeah, I can't. I'm just
I
hearing
can't. I'm
myself.
just hearing.
So you got to mute the mic.
You got to mute the mic.
Talk gadget.
Talk
Hang out
gadget.
video call
Hang
thing.
on, video call thing.
Okay, I think that's gonna work. All right, so let me get into this. Kind of try and make it a little more obvious. No problem, Andy. Okay, so I have this synced with this graph. So when I move the mouse along, you can see the activity. So this is a put. You can see it says P, and it also says up here. Now, of course, when it's small like this, you can't read it. But as long as you can see the P143, that's a put 143 strike. Okay. So when you look at it down here, if you don't actually enlarge the whole view to confirm it, you're making a mistake before you trade it. You need to make sure you've actually selected the right one. All right, so let me get into it. I want to explain something here about when you think that you're doing the right thing when you're back testing or you're comparing a trade with the past, and you're trying to say, yeah, it didn't trade at that price, so I wouldn't have made it, uh, or it did trade, or I would have been stopped out. Well, let me give you a couple of pointers here. All right, so let's look at right here. Okay, so right here on this chart, and I'll go ahead and zoom in a little bit. All right, so let's just, for argument's sake, say right here you took that call. I'm sorry, that put. I'm going to shut the low off on this so I don't have to look at it. So let's say right here we took the put. It's not likely that I would have, but I'm just using this as a reference because Chris did a very short learning trade on this today. But and this is not about Chris's trade. I'm just using Disney because it was an example I used earlier. So if you look up above in this area, you can see the yellow line here where I'm at. And you can also read up here the price, even though I'm down here. So right here, you can see the open, high, low, close of the option contract was $1.57. Okay. Well, we we can't assume that was as low as it went. Okay. You might say, well, you bought it there, but you don't know that that you could have bought it better. And what I mean by that is, and I'm going to go here and show you what I'm talking about because this is something you may not be aware of. So we're saying right here, uh, 157 was the entry. When we go down and look further down the list, okay, we can see 157 was the lowest price that it traded at. But that's not to say at the beginning of this candle that the red might have been here, so the ask could have been lower. So there's a strong chance, the ask could have been here and the bid could have been here, and you could have bought between. Now, you won't see this unless there's a transaction. So when you're looking at the trade and you're trying to figure out, what you could have gotten, you can't really guess what you could have gotten unless you record it with OSB. Because then if you recorded it with OSB, you could have went back and said, yeah, it traded down here. And I'm going to show you. Let me drop this down. So you could have said in OSB, you could see that maybe the ask dropped all the way down here and the bid was here. So you could have got it at 145, right in between, or even at the ask. But to say that the best price was 157 is not true. And I can tell you from my own trades, all too often when you look at the bar over on the chart here in the options, the largest candle at the best price is usually my trade when I'm trading, because I tend to always get a better price, and that's because I always shoot between them wherever they're at. I don't care about anything else that's happened. I don't care. Uh, I I always go between. So if the red is here and the bot, the bid is here and the ask is here, I'm going right here. So if I'm going to buy, I'll click right here and buy. All right, so that's an example. And then if we look at it right here and we say, we're looking for an exit point, my exit point would have been right around this curl up possibly. There's a point where I don't take 2/4, here. I wasn't, of course, this is just an example. It's not a trade I would have taken. But if I were at the high day in here and had a good push up, then maybe it would have been a trade. But again, when I hit the VWAP and I started to turn up on this one here, I would have been out. So now when you're looking over here and you can see it's right here, okay? So I'm going to try and get it as close as I can. Okay, so you can see, and I'm doing this on purpose. If you look, I can't target that candle. Okay, and if you look at the time frames, I'm missing time. So on this candle, you can see the time is 12:45. The next one is 12:46. And the next candle is 12:48. What happened to 12:47? So there's something wrong. There's something wrong with the time that you see here to here, because it sometimes if you don't have a trade in that minute, you don't see the bars. So it will actually be less bars in this chart than the bars you'll have in this minute chart. And that's why often you'll see I'll actually have a counter now that I've been using to give me the count. I don't have it on here right now because this is an active workspace that I've been working on getting ready for you guys. But so this one will become your scalping workspace. But anyway, so my point is that you can't assume, like right here, this was the high here, right? But we can't, unless you record it with OSB. There could have been a high, the times between these two, or the times between these two, you could have got out here. You don't know. You cannot see that. So if I don't see the recording, I can't tell you the correlation between the exit of what happens with the active trader or DOM if you're using like TradeView or TradeStation. So if in the active trader and TOS. So if you don't record it, how can I help you guys get better at understanding this? And today I haven't gotten anything. I haven't even got in a screenshot isn't going to really cut it, because the screenshot I can't go back and say to you that you had an opportunity here. Look at how the price action was moving, and show you how this is something that actually happens every day on almost every stock. When you're looking at the options in the stocks. So in order for me to actually convey where because already today, actually, while I was talking to Chris, these contracts, the ask had dropped all the way down to, I think it was 142. So the ask today was here just a little while ago, and the bid was about 8 or 9 cents below that, but nobody bought. But if somebody would have bought, then all of these would be black, but nobody bought it. Nobody bought a single contract during that time. So that doesn't mean there wasn't a great buying opportunity. Okay, and it was there, and it was right here was that opportunity, and nobody bought. Okay, just simply nobody was there. So I can't review that with you guys. And if here I'm telling you, maybe now you'll be looking at it, but the review of the OSB is really important if you guys want to to get more feedback and to be able to actually learn a little bit better, and how to be able to time entrances and exits a little bit better. All right, I think I've tried to explain that. I hope that helped. And And I've talked about yesterday about all the opportunities, we're doing the weekly versus the daily. Today, I gave Andy an example on a couple of stocks, and I think one was hmm, Zion. Okay. So I said to Andy that we had uh, on a scan uh, we had the white dot. Okay, and um, let me make sure this is set up right before I start talking. Yes, it is. Okay. So I was giving Andy an example of scanning back, 2 weeks or 3 weeks. So when you're scanning on the weekly, so you go to scan, and in here, if I go, this has to be on weekly, and then I say I want to go and scan back, say 2 weeks, okay, and then once I scan 2 weeks, now, what would be the purpose here? And then so I must have did a, oh, here it is. All right, so here's 2 weeks back, same. I'm just double clicking on it just so you can see that. All right, so I get the white dot, and I have 3 red bars, and this is the fourth. I prefer to see 4 red bars, but it didn't happen. So I gave this as an example to Andy. Okay, so you have a little bit of a tightening of the Bollinger Band. Okay, you're moving from the bottom. It looks like it's going up. This was below the this was below the fair value, because this is the actual candle for the weekly you just got on the scanner. And I said, so it looks like this has a good opportunity to go up for that 4-day run. And then yesterday you had both the 10% and you had the PPS give you a signal, okay, on top of what you had over here. So kind of a little more supporting weekly. So this is weekly. So that's why I stood on the scanner. You go ahead and set your scanner for weekly, and then I put down to go back 2 bars. And under the results, you can see the Zion came up. And so I was given this as an example to Andy, because remember, you're looking for 4 days. So if you got in today, and often you'll see a pullback on the second, you'll see a pullback on 1 or 2 of the candles, and those are opportunities to enter in. Now, to immediately buy on open is without getting a direction in the market would be a mistake. But if you gave it a little time, and in this case, you can see it actually had dropped down to the 10%, so near the bottom. So you got your signal. Okay, so this is nothing to be afraid of, because remember, you're looking at from this trade 4 days out. So in this example, the majority of the time when you get this signal and you have enough witnesses, you have a successful trade. Now, we didn't have these here. Okay, we didn't have the white in line, but it was just a quick example that we did. And I said, so conservatively, just say you pick one, because you do see often when you have a white, you get the 4 bars. So I said, if you can buy here, and obviously you're not going to load up because you don't have enough witnesses. So today on its own merit, it looks like crap, all right? But tomorrow, what's tomorrow on the following day going to be? Okay, because that's what we're looking at on 4 days, and that's what you have to look at, because typically on any trade, that's what you would be looking at. Here we had a white, and then the next day, okay, and then all of a sudden, because this is a higher low than this one, higher low than this. Your 2 signals came off of the low and 4 days up. 1, 2, 3, 4. All right, so that's an example. So what is different about this? Why is this one one versus this one would be like 10 contracts. And I did talk about this, but I want to reiterate it. All right, this bar here is slightly larger than this bar. Okay, now what does that mean? Well, tomorrow, if this bar doesn't end up being a yellow bar or showing up as a yellow bar, which will be fairly quick because these show up first thing in the morning. They do change slightly, but I would expect to see that this should be yellow. And if this is yellow, then we should have a little higher opening and a run. And is it going to happen? I don't know. Okay, so but this is one we looked at, and then there was one more. And do you remember what that was, Andy? And by the way, this is what I call you're kind of grasping for a trade because you really want to trade. So we went all right. So we went back a couple of days, but you can go or a couple of weeks, but you can go back and scan 2 weeks back or 1 week back. Okay, just try and scan 0 weeks back. You're in the week, so it's not going to really work right. But if you go 1 week back and you had the signals, then you know what you're looking forward to for 3 more days. So it would have been good if we had the white dot here. This would have been a much more comfortable trade to be in. So again, it's just kind of fishing on different ways to find entries and to be able to take trades. Again, always try to get the optimal trades.
So Kevin, between 3 week period and the daily period, which one would be better to trade?
Well, from money perspective, the weekly swing trade is going to be a far better trade than the daily trade, because at any point, if you decide to bail during the weekly trade, you can take your profits and get out. Okay. My preference is to follow the plan. Okay, so if it's a 4-day plan, I like to follow that plan. All that being said, remember I do like to get out and on pullbacks or on bounces. So if I'm short or long, it depends on which way. I do like to get out and then re-enter, and I do that often, and that will come. You'll learn how to do that in time. But for right now, I just think that you'd be prudent just to take the trade on the merits that I've given. So like on the weekly, if you're looking at the weekly scan and you're looking for like these two signals and you're below the value line, okay, then what you're looking at here is you're getting in here and you're going to plan on 4 days. 1, 2, 3, 4. Now, like right here, you'd be going, oh shit, I should have gotten out, right? And some of you may even sell and take the hit. All right, but if you follow the plan and find the patterns that work, you'll find that each time you deviate from the plan, you're hurting yourself. So, and again, I mean, you have to just do a little bit of work, and it's not a lot of work. I like to have, I like to see a trend on the histogram. I like to see a low, okay, or be all the way to the bottom of the Bollinger Band. So I like to get as many witnesses in my favor as I can, and I emphasize that already. But now other traders might say this is a high and you could take this trade, but I don't have anything here making me feel good about that type of trade, and I don't have anything in patterns to show that it's a good way to trade. So from the emotional observation perspective, it violates all my rules, and from my rules perspective, it's not a trade that I have a pattern that I would do. But some traders will trade; they'll just trade from the opposite side of the Bollinger Band, and that's their strategy. That's not mine. But again, my part of my responsibility is to give you the view of different traders and explain to you why I don't do that or why I won't do that. And this is just one example. All right, let me take a look at LLY. Okay, so here LLY, I'm just going across and I'm looking at signals. This dot, and it doesn't, it's not showing up with the red dots on either side, so it's not really showing it as consolidation, but this is consolidation right here. Okay, so this is consolidation right here. When you see 4 bars like this, very slightly increase in the body a little bit. It's indicative of a move. It can be either way. So like if these are completely reversed, it's a much more explosive move. And so, but in this case, you're seeing the consolidation here. Yeah, I'm going to get. All right, I'll get to it. All right, so here, what I'm looking at is when you see this type of move, you typically have an explosive move off of it. And so in this case, you did. Now, this isn't a trade that I would typically take, but you do have the white dot. You also had a dividend payout. Over here, you have a white dot. You have a signal, and you're above the fair value line, so it's not necessarily a trade I would take. And in fact, if you took this trade 1, 2, 3, 4, it's just dumb luck. From my perspective, it's dumb luck that you would get this because I don't typically like to trade on the down slope of the blue. All right, let me go over to the daily and see what we got here. Yeah, okay, so this is a good signal. For me, this is a very good signal. All right, so we're showing, and again, I think I've said before, I like to see the white dot and the second yellow. So this is actually one of my favorite trades. So I already show a trend between these three bars going down. The value of the yellow over here, if you read it, okay, the value over there is 203. On the red, it's sorry, 200.3, 202. So 202, 200, and then we're going down to 161.93. So the slope is down, and the same thing with, of course, the candles. We have a higher low, higher low, higher, the lowest low. Okay, higher low, lowest low. Okay, we're coming off of the low signal. Okay, we have one PPS signal. I'm sorry, we have one 1090 signal. Then we have the white dot. Okay, we're below the value line. At least we started below the value line. We have the PPS signal, and we have the 1090 signal. So we have a lot of witnesses on this trade. So on this trade today, if you were going to trade it, you would have been trading somewhere in here, and that's typically where you would be trading, and you would this be a 4-day trade. So contract wise, if you're looking at this trade, if you take this one, this is 3 days. So day 0 is the last day. So if you took it, Friday would be your out. Now let's look at theta. Theta is 6 cents on this. So if you took the trade, this is a really good trade. I would have went a little higher on the delta to give me a little bit more money because my confidence is higher because of the which I've talked to you before. You can go as low as 30 and as high as 70. Yeah, yes. So on what I told you guys is when you have enough witnesses like this is a 10. So 10 contracts. You lay it out in kind of sizes of 1, 5, and 10. This would be a 10 contract trade. And yeah, if it opens tomorrow and it's down, then it's a good entry. But you don't really want to chase if so, because you don't know, it could have a good gap up tomorrow. I mean, honestly, this is not abnormal for a gap. Yes, I apologize. That's on the weekly, not the daily. So this is correct. I changed it to daily. So yeah, you know what? And this doesn't even apply. So everything I just said, you can throw that out the door. These signals, the dot, and everything that I'm talking about would apply if this is on the weekly, because then you're looking for basically you're looking for the end of the current week, and then we'll call this 1, and we shouldn't call the other 4. We'll call this 1, and then On daily, this is an individual trade. If you took this trade the next day, you can take the trade for a long position. So you're basically you would buy calls on this. Now you have to go back in the history of Lily and look at every time you had your same signal conditions to see how many times it opened up versus how many times did it open lower and just draw the same candle, right? The PPS is good for weekly and daily, okay, but it's not guaranteeing. You can't guarantee. I can't give you a probability on the PPS by itself. I can tell you if you go back and on the daily and you look for these combinations. Let's say you find this combination 10 times. I know you can go back and find this same combination 10 times. You just keep going back, and in 10 times of 8 times it opened and ran up, or it opened with a gap, then you would have known today getting in at this time, 345 ish would have been the right choice. Well, let's say 8 times you saw that it actually opened lower, right? And then it went up, right? But it still went up. Well, even the fact that it opened low, let's just say as an example, 8 times out of 10, it opens lower and it goes through the roof. All right. Does that change the what you would do here? Well, yeah. All right. If it open, let's say it opens at the open, okay, 8 times out of 10, then you get a put, and then on open you get rid of it, right? Because you know that 8 times out of 10 it does that, but then it rallies right on past. So then you can go ahead and get your calls in. But you need to reference the history to find a match to see how it performs, and use that as the probability. And that's it's just that simple. Just again, it's all about probabilities. Every trade you should be doing is based on a probability of multiples of that sample. You don't want to just do it on. Yeah, I feel like this one's going to take off. And the moment you're doing that, you're going to end up with problems. Okay, so again, green and red, and I'm going to show you as well. So I made this study so you could have both of them in one study that you could drop in. So when you're looking at the PPS, PPS buy signal, okay, I'm just calling that proprietary buy signal. I have no other code in there except for that because it's incorporated as part of the toss, so I can call it anywhere I want. So the buy signal here means that I have a PPS buy signal and the color is going to be green. And the sell signal means I am going to have a red. And the offset is just where I put the arrow. An offset is how far I put the arrow below or above. So the offset is saying instead of putting the arrow on the end of the shadow, I'm putting a space between here and here. That's all that offset is. So when you see that green or red like that, that's PPS. When you see the cyan or the yellowish, goldish color, that's the 1090. Now you can change those. So if you want to make different colors, you can go ahead and you can go ahead and click on this, and then you can see call 10, put 10, call PPS, and put PPS. So you can see the call PPS is the green, the put PPS is the red, the call 10 is the whatever the hell color you want to call that, and then the put is the cyan. So you can actually change those colors. Well, the SCP goes into if you want to load the other tools to compare the probability numbers to make a decision just on the 1090. So again, so like when you have this was a 1090, okay, and so this was when the 10% of the top. When it's 10% of the top, I think it's 62% of the time is the average. That means the average across all mid cap stocks. 62% of the time, it's going to open and go up. Okay, and that's what the 1090 is. Now, there's some stocks it completely works the opposite, but the average is around 62%. But you need to identify, some stocks are even better. Some stocks you're going to be able to buy when it's, near the top 10%. And some of them always have a gap up. And although the gap may be small, some of them have a gap up quite frequently. And so but you have to identify that with the patterns with the particular ticker. So you should do your work. Like I typically would do my work at 8 o'clock at night, and I do my work at about 7 or 8 in the morning. And then, I'll make my decisions then. In the morning, I use the morning time to see if I need to adjust my outs on the things that I'm in. And in the afternoon, near 3:40, 3:35, I start looking for opportunities. And if an opportunity presents itself, and of course, I typically trade from my same list. So I have a lot of markups in some of these. So and some of them I know I don't have to go back and look anymore because, you get used to some of the numbers. You see them enough. So again, you have tools to help you. Like here, uh, you close within 10% of the bottom. It's telling you the next day it's going to be a short candle. Okay, so now if you bought here, it don't look very good because it went up and then it did go down. But and that's subjective. So you have to, and all trading is subjective. So you have to compare. You have to compare when you've had a candle like this, okay, and you've went from yellow to red. How many times does it move, and what kind of move is it? If you find a lot of short candles like this, then it's not a trade that you would be taking here. Okay. Now, how do you do that on the same day? Then you're trying to decide to enter, and you only got 15 minutes remaining. That's why I'll take some indicators and I'll load the indicators up, and I'll go study these. And this one, which is something I've done a lot. I'll pick the stocks out of my list and I'll step through one by one, and I'll make notes to each ticker. Things that I see. So I may go from yellow to red, and I'll determine certain behaviors that I see. Maybe from yellow to red, the majority of the time I see a red candle. Okay, so now majority is a generic number. That's not, I mean, that's generic, but it's not a number. But if I go back and say I go from a a uh, it's not really purple, whatever color that is. So we'll call it purple. So if I get a purple dot, yellow to red with a green, okay, that's a lot of information. I have two distinct colors for dots, and I have two distinct bars. Okay, now when I look at that, okay, and uh, on this bar right here, I see this similar pattern. I see the same thing, and I see it happen a certain number of times. Then I want to divide how many times out of the number of count that I found it did it do a certain behavior. Now maybe I'll find that, or maybe well, let me go a little bit further to the left. Let's say I got two yellow candles, going down lower, so it's high or low, and I go from green to purple, and I have flat candles running at the value line in the Bollinger Band as an example. This is a better example. Okay, so when I see this combination, I have a green candle, a red candle, I have two yellow bars, I have a green and a purple. That's a lot of detail for your snapshot of the pattern you're going to look for. I go back and I find the same exact pattern 10 times. And 7 times the next day, I see that it drops down. It has a strong run down. Okay. Then I'll take a screenshot and take this piece here and I'll put it into a Word file that I have for the ticker. Okay. And some of them I remember, not all of them. Sometimes I have to go back and look. So then what I'll do is I'll use certain words for a search for, because you got to go find, right? So I'll put GR, okay, yeah, YY, okay, or I'll go GRYY green purple, something like that. Not the whole word, just the first letter. Then I go to my Word file for the ticker and I go search, and then I find. So I create this referenceable database that I have for patterns that I see. And so we'll call this a pattern, and then we'll create a search that we can do real quickly in Word or in Excel. I do some of mine in Word because I like to paste the images in there. So I do a quick search and I see the image, and I have in my my write up for this particular pattern that 10 times this pattern occurs, and 7 times it has a small gap down, and it goes short. All right, using that as a reference, then you can say on this day when you see this, you've already found it quickly in the way that you do your search. You can take the trade because you have a historical pattern, a sample. Now, and again, you can't do a sample for every single thing every time and do 25, but you can do block samples and you can take samples from different tickers. That's why in my list I had 50, and actually I took another one out today, so now I have 47 because I'm tweaking it down. I want to get to 10 in here, and that's all I'm going to trade. I made up my mind. 10 is the limit for me. Look at that, man. We just broke another record. Okay. So I don't know if you guys are watching this at all, but let me go back over to the futures contract. I'm going to step out of this for a second. All right. So I don't have any news going, so I can't hear anything, but yeah, this is after hours. So this stopped here, and all of a sudden after hours, it had a good run up at 435, and then it pulled back a little bit. So whatever news came out, everybody's settled in with it. But the gold price is probably going to continue to rally. Which unfortunately, what this means is if we go, let me go look at the futures market for the Dow and the Nasdaq and the S&P. Yeah, they're already started going down a little bit. So the Nasdaq's still up a little. It's still giving me delayed data. Sorry about that. 1 second. Okay, so I talked about loved stocks and hated stocks. And let me see if I can give you a good example. Matter of fact, we can use Tesla as an example because Tesla's becoming a hated stock by Benny. So it used to be loved, but now it's kind of hated, right? And and after hours, look at that. It's gone up $20. Okay. Okay, I have no idea what the hell is going on. Why Tesla's took off for $20 damn dollars. Let me take a quick look. $95,200 vehicles in the second quarter. Yeah, so they beaten the 91,000. Surprise, surprise. So that email that he leaked said it was going to be 92,008, or that he said he didn't leak, was supposed to be 92,800, and somehow it ended up being 95,200. Yeah, I don't know. Seems like something's rotten in Denmark, but this is pretty typical with this company. That's why I think it's hated and loved across the board. But it would have been nice if you had a contract in that, even one contract, because that option, just one option. Well, I'll give you an example, and you'll see it tomorrow. So one call option contract. So let's just say you pick this one right here, right? Okay, 24. All right, so right now the price is let's just say 245. Okay, So let's say you got this one, and now let's go look at it. Okay, watch that number right there. All right, 245. I'll dial it in. 245. So you could have bought the contract today for 121, and tomorrow it would be 295. That's like in the middle of the day if it's the same price, but tomorrow will be a lot more than this because this is expected based on the current implied volatility. Implied volatility will go through the roof tomorrow morning. So yeah, that's of course you don't want to buy it tomorrow. It would be a bad choice to buy that contract tomorrow. But anyway, so let's look at this because this is truly a hated stock for the most part. I keep getting surprised. Gold, Tesla. I mean, maybe I should go look at something one of you guys has. Okay, so back a while ago, I had did a line like this for Sean and Joe and Corey because I think it was right around here. Willie posted that he was investing X dollars and that it was a safe investment. And I had posted in the Wizards Room and a couple places, this is really an unsafe investment. I can't understand. I can't wrap my mind around this. And anyway, so I gave them a target of around 180. And in fact, I think the line's still here. Oops. Sorry, I'm picking on a gap. Yeah, matter of fact, there you go. So yeah, I had a 180 target. Matter of fact, he actually had said he was going to buy more at 180, and I said, "Hell, it's going to 180. Why don't you just wait and buy at 180?" All right. Well, anyway, here's my point about a stock that's truly hated. Oh, you remember that? Yeah. I mean, it was like this is insanity. So, I still have difficulty with some of the decision making by that young man. Um, all right, so in here, if you look, it never goes back and hits the other side. It will always go to the value line. I mean, this really never seems to break. And a love stock will go and push it up, okay, and then we'll come back and then turn and go up. And a lot of people, you guys call that a cup and handle or cup and saucer. I don't use those terms, but anyway. So, but if you look in here, right, it just stayed pretty much below the fair value. You see this on stocks that are hated, okay? On stocks that are loved, even when they're going down, there's new buyers coming in because they say there's a buying opportunity. I can get it more at a better price, and then they'll push it up. And so, stocks that are hated, this is what you see. Stocks that are loved, you'll see it'll always pierce the line and go up, and it will do it, every so often all the way down going into the toilet, but you still have conviction, and that conviction by those that are buying it, that's an opportunity because at every one of these high points with that kind of conviction, you could have went short again. And so you can use that. If you're a good trader, you can use either direction. You can use the by the way, these areas going up, this is called the bounce, okay, and this is called the average area. So if the direction were the other way, something like this, okay, so the trend is going up, and you can see when it stays above the line consistently, it's loved. But even if a stock that's going down, if it doesn't breach and go to the top, it's hated. So this stock is a stock, or there's people that love love trading this. All right, but for me, on something like this, I see that if it hits the line and it comes back through the value line, I see this particular pullback as a buying opportunity to get in at a price to go up. And this is called, this particular trade here, uh, this is called a small pullback. I don't particularly trade these because it's insignificant. This is called a regular pullback. And then if I had another rally and a drop down below, that's called an ABCD pullback. And those trades are quite a bit more risky because you don't know if it's a legitimate ABCD pullback or if it's actually going to be a price reversal. And so those are very difficult trades to trade, and a lot of traders blow up their accounts trading them. So this is kind of an example. Let me see if I can find one with a downtrend where it's actually tagging the line. Okay. Yeah, so many. This particular stock was a great stock. Raj, you know what this stock is good for, right? I'm sure Raj can tell everybody. This is a no-brainer. Basically, you buy a call here, buy a call here, sell here, sell here. This is a
Right.
class. Go ahead.
So basically, I just go by the Bollinger Band and gap. As long as it's not piercing down, you probably, it's going to act as a support.
Yeah, this is a typical iron condor trade. So
That's true. That too.
yeah, that's what I'm talking about. This is a classic iron condor. So you get about this length of run, and then if we look, I'll give you guys a quick example here. So we're going to take just a half of this to kind of get a ballpark. So we know we got 44 days. That's 2 months. It's been trading that way. So if we were right here looking at the mouse and we didn't see the data to the right side on this particular stock, this is what you do. You're going to take a contract and you're going to be just above it, and you want to go about one deviation out. Okay, and then you find the low and you go about one deviation out. All right, then you go half a deviation above that and half a deviation below that. And so you all get this. I want to be very clear here. So you're buying this is called an iron condor. So here you're doing you're selling a contract, you're selling a contract. Here you're buying a contract, here you're buying a contract. And this is a typical iron condor. And the chances of it breaking or passing through, and when you do this contract, by the way, you can actually see what you get paid up front for it versus the cost. And in most cases, you can actually run a tool to actually see how this trade typically would pan out, and it will give you a probability. And this is a kind of what I call free money trade, because when you have this kind of consolidation, it will typically tend to do it for another period of equal distance. Yeah. Okay. So yeah. So so Roger understands this, and of course, you guys are going to actually get to this at some point here. Well, I hope that I get to this with you guys. So this is a very a safe trade and what I call free money trade, because in most cases, either way it goes, you only have a certain amount that you risk, but in almost all cases, these will actually yield. I believe the typical one is going to be uh, on 68%, you're going to get 100%. No, over 68%. I can't remember. It's been a while since I did a lot of these. But anyway, the bottom line is that very few of these do you actually have any risk, and then the risk that you have is really, really small compared to basically the kind of contracts where we're buying, where the whole contract's at risk. So anyway, at some point in the future, we'll be going over some of this. I'm not going to do a lot on this, but I'll do some. All right, so here's an example on a pullback, and here's an example on a stock that's it's passed and it dropped below. So, and here you didn't quite make it all the way through, but at the beginning of this, I'm not going to say that this stock isn't loved, but if we had another point where it came back through and went up, then it's a stock that's on the fence. But this looks like a stock that's loved. Here we came through, we had a gap, and the gaps always affect the stock and affect the way that it runs. And we came back and we had a pullback. So this is actually considered an ABC. You have the A, B, C, D pullback here, and it didn't break and turn into a reversal, and it came back. This is your buying opportunity for an ABCD. And I don't know how if you guys are familiar with that type of trade, but there's a lot of people that's all they trade. All right, here's a stock. Merck is it's hated and loved. So it's not going to hold a trend. It's going to always be erratic. Now, this is a great stock for option contracts, for uncovered option contracts, because you're going to always get things like this histogram right here on this type of stock. That would have been your buying opportunity right in here. Okay. And so when you see certain stocks, you add those to your list. Those are the stocks you want to trade for this type of trade. And this is why it's important to get intimate with your stocks, right? Here you had a stock basically in a free fall, and you got a signal, okay? But there's no reason, not when you look at this, when you have experience trading, this is not Merck. I mean, look at the activity in Merck, okay? It's the bands are opening, consolidation. It's quite a different flavor. Here you have this large move, right? Just a massive move, and there's no sign of a break here. And in this particular one, you get in here. If you take this trade, okay, you'll be okay for on this day, on the next day. But anything beyond that, you're gonna get crushed. So this is not a reliable stock for those trades. And you go back and look at the history, and you'll find the same histogram with the same patterns, and then you'll see that there's just some you have to avoid certain trades. Um, Again, on this type here, this is this is more of a this is more of the moment you were channeling here and you broke and you established a new channel, you could have ran an iron condor up here. That's a different trade. Okay, here's a stock. This is a lot of pullbacks. This is a stock that's somewhat hated. I mean, there's just you have some people that are committed to this, and other people that they just don't particularly like it, and they're just going to use it for any kind of gains they can get. So here you got a pullback. That's the buying opportunity. Comes back, get a pullback, you get a buying opportunity. This is standard pullback, and so this is a stock that's kind of it's not considered a loved stock. This is considered a hated stock. On this particular stock, because you have this pattern, more of an erratic pattern, like similar to Merck. When you get a white dot like this is a good opportunity to go ahead and take that trade. This is nothing like the other one, but when you look at Merck, you got a lot of choppy action in here, and this is a very similar profile, and that's why you can see the success you would have with either of those with that type of signal. So when you're looking at these, you got to compare them to similar profiles, and that's when you'll find out what good success is. Here this is kind of choppy. It's not all huge. It's not huge like Merck or Home Depot or Lowe's or whatever one it was just looking at. I think it was probably Lowe's. Sorry, I always call Home Depot. It's just I tease the neighbor. He's 100%. I mean, he doesn't wear a dress on the street, but boy, he's out there. That's his lifestyle. But not the one to the one side that's tearing everything up. It's the other neighbor. Yeah, it's his lifestyle. It's not my lifestyle. Anyway, so here you had the signal here, and you were below the Bollinger Band. That's a good indicator to me. Now, sometimes you'll have the Bollinger Band continue to run down. Okay, but you don't get it in stocks like this. You don't you get this. This is the kind of choppiness you're looking for. This is the best kind of trade for big claims. This is this is crap. I mean, honestly, this is probably one I'm going to drop. Right. So there's some of these that just don't belong on my list. Um, yeah, this is probably one I'm going to drop. So some of these I'm going to drop. All right, here's Home Depot. Uh, Home Depot's a pretty good one to do. Okay, I'm going to be honest with you. Both Lowe's and Home Depot I like. All right, here's your white dot, 2 before, right? 2 before, 2 after. I always like those. All right, on this one, you're taking the trade. And so here you're taking the trade. And of course, then the opens here. And, of course, then it goes down. I call that buying opportunity. It goes to the Bollinger Band and gives it a good kiss. And this is the kind of trades that I like to take. I'll load up here at a discount. I mean, just an unbelievable discount. I don't look at that and go, oh, shit, I just lost 90% because I'm in a swing trade. I don't do that. I don't put that pain onto me. I look at the trades on probability. So here, I'm loading. Here I entered here. Here the next day, I'm like, all right, it's going the way it's supposed to, right? But not exuberance, nothing like that. It's good to see it go my way. All right, it goes down and starts dropping down, and I'm like, okay, let's see how far this thing goes. And I'm looking at it without anticipation. I mean, yeah, I'm not supposed to have emotional feelings about it, but you know what? I'm looking for a fantastic entry price. So if I see a drop to 90% of what I bought it for, and I can buy 10 more at 10% discount, man, that's a pretty good deal, right? I mean, Chris, if cars sold that way, a lot of people would be coming back, right? All right. So anyway, here you go ahead and you take more positions, in here. And then the next day, of course, then you have the open and you end up with 2 strong signals, right? And boy, what a nice feeling that would be. So, if I had those 2 signals and I'm below the line and I'm transitioned from red to yellow, right? I've already got my positions on. I'll probably be in this thing for 3 or 4 days, and I'll be hoping like hell that I don't have 2 days on expiration because I hate to get into a weekend with that kind of beautiful setup. Those things. Well, normally on this type of type of trade being below the line, okay, with the white dot alone, I like to see 4 red bars. So let's look at it, right? I got one. Not the bar that I'm on, but I like to see 4 before it. Go 1, 2, 3, 4. Okay, so I got 4 bars. Now I have another white signal here. Okay, I don't particularly like to see that, but it wouldn't discourage me. So on the scale that I've talked to you guys about, not the scale that I use because I don't want you thinking that way. I want you to keep some sense of moderation here. So on this scale, on this particular trade being where it's at in relationship to this. Yeah, I mean, yeah, well, actually, and I think I said to everybody, uh, Monday's the day to act, because of course there's going to be a change in sentiment and the news will come out. And so anyway, I posted something along that line. I don't remember exactly what I said, but anyway, yeah. So here's an example. You go ahead. You're going to take the trade. So in the scale that I've talked to you guys about, because I don't have like the 1090 here, right? And I certainly wouldn't have had the PPS in here. I have it in Excel, but I would have been looking for the 1090. And at this value between here and here, I like that. I'm coming from the low, so I know I'm going to the top. That's my sediment. So on your scale, this would be about a 5 contract entry. Because I don't have all the witnesses that I need. See, I'm not on the other side with the trend. I'm not, like getting in here. Getting in here is a better entry than getting in here because I have higher lows. I have higher lows on price action. I have a green candle, right? I'm below my line. I'm moving from the low to the upward side. So this is a much better signal. Here would have been a 5 contract. This would be a 10 contract, 10 being the max. And this is the, keeping things in perspective. Well, the hammer only has a value of 53%, and which is amazing because that green candle has a value of 53.8%, and that candle has a value of 53.8. So both of those candles are a better indicator than that one. But everybody tends to believe the narrative that's taught on YouTube and in the internet. But in fact, if you go to the link that I gave you guys and you go look at the published value for that particular long-legged doji, you'll find that it doesn't have as much value as you all think. Yeah. So both Home Depot and Lowe's are good ones to actually. For me, they've been good ones to trade, and I like them. Yeah. Well, again, I like to use the. Again, I'm more of a larger swing trader, and I gave you guys lots of examples because I want you to have a variety to pick from, and you'll find what's good for your emotional makeup. For me, I like to actually take on the 3 week trades or stuff like that, 20 days or 10 days. I prefer those trades. Yeah, you guys could you, look. What my words aren't gospel here. Okay, I can only give you guidance and suggest ways to look at things. So I've said that I don't particularly like to trade the white dot on the blue, dark blue, nor do I like to trade it on the cyan. Because if I traded this, what is my expectation? Am I expecting it to go up or expecting it to go down? Okay, and now if it were a white dot over here, then I would feel a lot more comfortable taking the ride down that ski slope. But for me, some of these white dots really have no value. Now, now you may find that not to be the case. If you find a plethora of white dots and white and light blue and dark blue in a long run like this, you may decide at some point that that value is in an iron condor. So maybe you'll learn how to do an iron condor. So there are values and you have to compare them to references. But like I say, uh, like here's a white dot, right? So here we have a white dot, but we're not into it very far. Okay, we're not very far into the slope. And we just came off of the cyan, and cyan to blue is typically indicative of a change coming, but it doesn't, it's not a guarantee. But, if we look at that, it would have been good if you had the white dot and this were up above the Bollinger Band, then it would have more meaning to me. But as is, it doesn't have as much meaning to me. So I would just discount it. Okay. So and you have to interpret and learn how to interpret these. And how can you do that? Just compare it to past patterns, and especially past patterns within the same ticker is the best way. So we're coming across here, right? Here's a white dot, right? And we had a high. Okay. Now I like to see a high. I see a high with a white dot. I feel pretty good. And when I see that, I'm going to look at that and go, yeah, this might be a ski slope, because what you'll see is if this is in fact correct, another day or two, because remember these Bollinger Bands are lagging, so this blue line is still going to move a little bit depending on the next day. So if this drops down lower, so let's look at trend. So if we look at the trend and we just do a line, okay, you can see this one went slightly above. But if this next bar is actually back to this, then that means this is going to be lower, and this red is going to pull down, and this green is going to turn, and it may even pivot from right here. So now all of a sudden, this one's not above the Bollinger Band, but this one will be. And that's why these lagging indicators, you have to be kind of careful with them. So when you're this close and you get something like that, it looks like you're on a ski slope. Try to anticipate, what has happened here. Now, to go back on this particular one being that close, this is a hard pattern to go back and say you found it, because the truth is that anything you see, the Bollinger Band set. So it's what you're seeing is solidly locked in. It's not dynamic. It's not changing. Where both the upper and lower Bollinger Bands still are in flux. They can move. Hi, baby.
Hi, Daddy.
So. Oh, they sent me a check?
Yeah, you said it.
Yeah.
And a bill.
Okay.
And a bill.
I think Chris was referring to red and yellow plus PPS and SCP witness. Yeah, again, you pick your indicators, any combination, and compare that pattern. So whether it is on a daily with the PPS, the SCP, and any combination, just compare the pattern, and the pattern is going to give you the indication of whether it's a good trade, whether it's a call, whether it's a put. So I can't tell you because every ticker is going to be a little bit different. I mean, I gave you an example like Home Depot and Lowe's, how that price action up and down opens the door for a lot more opportunity for bigger runs. Where something like this is going to give you an opportunity, but it's not. It's obviously it's going to be better than what we had over here. Like this one right here, right? This is fairly narrow channel, and then it just took a crap. So this is not something that I consider to be a good stock. Where Home Depot and Lowe's, those are pretty much the same. Just go back year after year, month after month, and you'll see very similar conditions. Yeah, I don't know. Yeah, aftermarket. Yeah, but you don't know. I mean, he does his own thing. He's he does his own thing. Let me put it that way. I don't know. Maybe he got enough. Maybe he had enough. Maybe he just maybe he thinks he's got a better path. I don't know. I honestly don't know. I hope he's okay. I hope his boss didn't fire him or something. Yeah, I've warned him repeatedly, man. You're on your job. You just do your job until you're ready to bail. I mean, you don't you don't have to gamble with your job. Your insurance and everything. But he's a young guy. He's 24 years old. I mean, I can't. Nothing I say to a 24-year-old is going to stick. When you're young, you got to conquer the world on your own terms, and that's just the way it is. All right, so let me see. I'm going to go ahead and we'll go over here to Disney. Disney. This is a good one for like an iron condor. Now, this is so you'll. And by the way, this is seasonal, so you'll see this kind of seasonal behavior. It's easy to trade that. So there's a reason why iron condors are successful for a lot of traders. And again, it's low money. So, if you're looking at 15 to 20% a year, you can do on iron condors all year. All right. So looking at this, again, this is not a particularly a great stock, it's not a good stock for me on daily. This is a different animal when you look at it on the weekly. And then DIA, it's it's just the futures. It's basically just another ETF. Yeah, you can see the ETF here had a pullback and then it came back and consolidated. All right, this is pretty much a typical thing for this particular ETF. Right now, remember the market's kind of in flux. People aren't sure whether the whole thing is going to tank or go forward. So on some of these right now, you just got to be a little bit careful if you're going to trade them. And of course, even the stocks, I mean, they're going to kind of be fluctuating a little bit. But then if you're smart, you'll be able to see the opportunities and trade those. Here you can see the gaps forming like a 1.3, and the next day the gap fills. Right, here's another gap right here. It basically shut up. And then same gap on the other side. Just gap created an island. You'll see a lot of stuff like this. You see this in things like gold, platinum, silver, oil, anything oil, platinum, gold, or silver. You'll see a lot of islands form, and that's because some of these are traded and there's trades in overseas, like in Asia and in Europe, and they're trading the commodities markets as well. And what happens is there's a kind of a correction when our market's up, and so you kind of get moves. So you got to be aware of some of these things, and some of it you'll learn over time. I can't teach you all of it. Yeah, I've heard that so many times, and the market's going to crash, the market's going to go up, the market's going to crash, the market. I don't really care what the market does. I mean, I, it'd be nice to have the insight to see that, and there's many times I think I can see what's going to happen, and then it just doesn't happen. It's like so, yeah. So, uh, what I can tell you is around election time, that's when you're going to see the market really move. Yeah, adaptation. It's kind of like that TV sci-fi series where they ran into the Borg, right? Adapt or be assimilated. Yeah, and that's why you need to know the sandbox stuff and the ion condors and some of that stuff for the sideways channels because there's always going to be a period that happens, and you just are not going to like you're seeing all this activity and this block of time on the daily, but the next 6 months might not look anything like this, and so it may just be steadily up or steadily down, and you're going to say, how the hell do I trade that? Mac didn't show me how to trade that. Yeah, I actually showed you how to trade it, because if you go back over to your daily, right, here's the one thing you can bet on. Okay, and I'm going to just go back over here as an example. All right, I don't like to trade on that cross. I like to find my signal before it. But I will tell you, once I'm in here, the one thing I can bet on is until my moving averages come back around, I'm in that trade long. Okay, when I get on this trade and I'm short, I'm in this trade short, and do I have a good reason to get out? And that may be, I start coming and the gap is getting tighter, and I don't have to wait for it to go there. I can just bail out, at the, at the percent VWAP on the deviation. So again, right here when it starts going up, I could have jumped in here right here on a coin toss and said, okay, I'm long until I see a reason to get out. You don't have to be a rocket scientist to make money in the market. Okay, all you have to do is disconnect from your mind and from your emotionally everything you think you need to be successful. So even if you just jumped in right here, green, and you said, okay, you know what? I'll just set my stop down here at the intersection, right at the crossover line. Then you just enter right here. What's your risk? That's your risk. What's your reward? You don't know. And you don't know until it comes back and, it gets to that point, or starts to curl down like that. So I don't give a crap even in a sideways market and the candles are moving up and down. And I'll give you another example I gave you yesterday. I'll do it right here. So let's just say that the market is slowly trending up, right? So when this opened lower, okay, typically when the market is trending up, when it opens lower, most guys will trade to the long side because they expect it to go up, right? Well, you want to do that when it's closer to the midpoint. So like when over here, you closed and then it opened higher, okay, it will tend to gravitate to the line. So you have to trade to a line. So either you're trading to this line or you're trading to this line. So on this signal here, you close here and the next day it opens up. It opens up, but you're always looking for it to come back to the previous line. So this is a common trade. It's not one that I do a lot of, but even in a market that's slowly going up, if you want to just trade an intraday, you can. You could have taken this trade and you could have went short. The next day, right, it opened above, okay, and you rotate that. You'll go red candle, green candle, red candle, green candles, and I'll show you this several examples. This is a very rough example because I don't have anything to support this, but I can give you examples. So here, when it opened above, right, and you're going to take the opposite direction. It opened above. You're going to go ahead and go long. The attitude here is you're going to always be gravitating to one line or the other. Okay, on this one, when it opened up, right, you have a choice. You're going to be trading the red candle or the green candle, okay, or you're trading to the line because now you're already well past the midpoint of the line. So you have to look at that. And then there's things like uh, uh, the average over a sample period shows 52, 53% of the time a candle will go long. So you could take all of that into account. And so there's a lot of ways to establish a trading profile for even something as crappy as this. And it just takes a little bit of work and a little bit of practice. There's other factors. People will make a trade and they'll establish a trading pattern for some crap like this based on volume, right? Based on the simplest things. I don't do a lot of that, but there are trades that you can do in a tighter channel. And what I'm specifically talking about is when you get into a channel like this, okay, a single bar channel. When you get into a single bar channel, anytime you're red at the top, right, or anytime you open high, it's going to the bottom. Anytime you open low, it's going to the top. Anytime you open high, it's going to the bottom. Because you can trade a single bar channel with much more accuracy than you can a lot of patterns. So if you take any channel that's established, and longer the better, obviously longer the better, and then you'll trade to the channel up and down. Now short candles like this are crap. So the example I'm trying to give you is something when they're more consistent like this. So you had a green candle, and if this opened red up here, the expectation is going to trade down. And of course, the channel has to be longer. So there's a lot of trades, stuff like that. I mean, and some of it is okay, some of it is junk, but and you have to determine which is which for you. All right, let me go back to. I'll go back to and just do one or two more over here. Yeah, and I can you can actually find some samples of what I'm talking about if you just go look and you'll find like if you got 5 bars and there's a pattern of 10 bars of doing this on that particular ticker, and you see the pattern started 5 times in a tight channel, then you know you got 5 more bars of trading that you can trade. That's 5 days, and those are trades you can find by using the same idea of shooting for a pattern. So, I wish I could find a clearer example, but because this is one that would need to be cherry picked to be able to show you an accurate representation. Yeah, I can. Okay. All right, let's do it this way. I'm just gonna swag this, and this is not gonna be precise, but be good enough. All right, I'm looking at right here. If I wanted to get in right here at this consolidation, so I'm gonna wait for a candle to show some movement, kind of breaking this top right here. Okay, so on this candle, I'll go ahead and take my shot. All right, so with this being the area that I'm looking at taking my shot at, what I would do is and this is Disney, but I'm just gonna leave this as is just for the example. All right, so if I'm going to be taking my shot, and for you guys, I'm asking you to do one, okay, and then you're going to take it right here, and you have 2 ways to look at this. Okay, the bottom of that candle is 153.57, and you can subtract 8 cents from that, so it's 153.49. So you can do 8 cents on the trailing stop, or you can just set the maximum you're willing to risk. So let's say the maximum you're willing to risk on the trade is 10%. Okay. But in most of the trades, if you're trying to get 2 quarters, you're trying to make 100% or somewhere in that area. So 10% risk to 100% gain is, it's 10 to 1, right? So to me, that seems like a pretty safe number. So what you want to do is go ahead and set your quantity, and you should actually go into setup and set it for the options as well. Then you want to go ahead and pick a trailing with bracket. Okay. So you have a lot of choice to pick the first one. And then what you want to do is take that out and then let me close this up. And you should have set up all the time. You shouldn't have to, this isn't something you have to keep setting up. I'm going to show you how to do this. So right here, you go ahead and you pick the bottom one, you uncheck the top one, and right here you'll set trailing stop. Okay. And then here, go ahead and you don't want to take offset, right? You want to go to percent, and you want to go ahead and go down minus 10%. Okay. Now I have one already saved at 10%, so I'm going to do want to say 15%, right? All right. And now that I have that in, right, I'm also going to select this. And now I'm going to go ahead and hit save custom order template. And I'm going to put in 15% and then save. Okay. So now when I go back and I'm ready to do a trade, I always like to have auto send on. Okay. And then I'm going to go over to my template and I'm going to say, give me my 15%. And then I'm going to be looking, between this area here and this area here. I'll place my order. Okay. Now here, if I'm going to put this order in and it's going to be something that's going to go overnight, I'm going to say good to cancel. And then that way at 3:45, 3:50-ish, my order's in. If I get filled, I'm good. If not, I can cancel my order, all right, or I can let it go into tomorrow. Now, I will not let it go to tomorrow, just so you guys know that. I'm either filled or I'm not filled. All right, so now what I do is if I go over here and I click on this, okay, both orders are in, and you can see them right here. So here's my limit, and here's my trailing stop. Now, my trailing stop is above my limit right now, but you don't have to let that worry you, because if you go back, right, look at the contract, this is a put. So even though when I was over here, just for clarity, when I clicked on this, it showed up when I first clicked on this, if you were paying attention, here, I'll just flatten. So I just canceled both orders. So I'm going to do this one more time. Yeah, it knows what you did. So like right now, when I click on this, right, I'm going to just go down here. So when I click on this, you see how it looks like it's going down below? So it looks like I'm buying a put, and and it's showing the price going down below, right? Which is right, because I want to have my loss. So I put my order in. When I go back over here, it looks inverted, but it's actually exactly the way it's supposed to be. Okay, because what will happen is the first tick, this will adapt and readjust and position itself correctly. All of a sudden drop down below. But until you have some action, you always look skewed up like that. But you don't need to worry about it. Okay, and then you can also right click on it and you can say cancel and replace order. So let's say you're doing a trailing stop and you don't like the trailing stop at 15%. You see that the ATR number is getting bigger. You can go ahead and adjust that trailing stop. Maybe you want to move it up or move it down. And then you say confirm and send, and then send. Okay, you still have both orders. And even if this order fills, and this order is still here, you don't have to cancel and resubmit the order. You just right click and hit cancel and replace. So you can cancel and replace it. Now, why is it important to do this? Because when I enter that order here, I've already limited myself to a move of 15% down. And now I can tell you 15 if I'm getting in here and I'm looking to get 2/4 of movement, or like I'm trying to go from here to here, and I'm risking 10%. I'm risking, and this is 100% of the area that I need to make my 100%. Typically at this 50 and the $100, $150 price range. Then if I'm looking at 2/4 to get 100%, I know at 10% I'm giving up 10% of this range. So if I get in right here and I'm expecting to go longer, I'm expecting to go short. In this case, I did a put. So let's just say I had the order in here, then I know that I'm looking at 10% of the range, okay, between the two. So if this is 50%, that's 25, 10%. I'm looking for my move that far up and I get stopped out. And that's a safe number to go ahead at 15% or 10% is a safe number when you're first learning to trade. Now, if you don't want to do that, you can actually go ahead and set up another one, and I'll go ahead and flatten these. All right, those are out. Now, if I want to do a different kind of order, I'll go back and say single. All right, and then I'll set that because I'm going to set it, the whole trade up so it always has the same settings. And then I'm going to go over here, and if I know that I want an ATR of 8 cents because that's the price that I'm trading at right now, then I can go in and I have a value offset. Okay, so my value offset, I can go ahead and scroll down, or in this case, I want to say a minus number. Now, even if I go the wrong way and I put a plus number, it's still going to fix you because it knows we're stupid, right? So you really can't screw up. So here, let's say I put in, I'll just put it in. So minus 0.08, enter. Okay. So now I have a plus minus. Basically, I'm looking at a value, and I put in a trailing stop, right? Now I can hit save, or let's just say I want to go ahead and put the order in. Now I put my order in here, right? Okay, so order's in. All right, now over here, here's my order in, and I'm showing my stop above. Okay, now and again, we're not seeing any activity, so this is not transitioning. It's not adjusting, and this is kind of normal. So let me go ahead and flatten, and I want to show you this, and hopefully this works offline because I've done this online and I've done this offline. I've done this online, but I haven't done offline. So let's say I put in 0.8 here, and I go ahead and put that same order back in. Let's see what it does. Okay. See, now a different number, and let me do this one more time. Okay, I put in 0.08, enter. Now watch what happens when I click here. See how it changed it to negative? Okay. So it's going to correct your mistake. I mean, it's going to be hard to put your order in backwards on a put. It knows what the trailing stop is for. So I typically just set it correctly so I don't have any hiccups or have to say why didn't it move in time, because it does adjust after the first bar. So it's kind of important to know that. So you can do your trailing stop. You can do a trailing stop. You can do all kinds of different combinations in here. You can do a limit stop and a trailing stop, so you can actually put both in. So if I put this order in, I'm putting in an order below and an order above. So let's say I want to put my out. I want to be 20, say 0.25 or 28 or what. Okay. So now when I put my orders in, I have my trailing stop and I have my other stop. Now, of course, they'll all adjust after the fact. So let me put this in at 0.08 and see what it says. Okay, see, they're still showing the same things. They're both above. So again, it will all adjust automatically, right? It will automatically adjust when you put the order in. So one, you can have a trailing stop, and one will be a limit stop. If it hits the limit stop to get you out, which is your profit, what you're trying to get to, you'll make your 28 cents. If you Well, if you're going to sell the call and you're not going to use any of this stuff that you've entered, uh, yeah, what you'll need to do is hit cancel to cancel the orders. Don't hit flatten, just because if you hit flatten, it's going to sell you out. So just hit cancel and it will cancel the orders. And that, it's important that you know the difference between the two. I leave both of these here. One is to flatten everything, and one is just to cancel the orders. And so you just need to know the difference between the two. Yeah, yeah. I've never had that happen, Ronnie. I'm not going to say that it can't happen, but usually when you sell the order, you'll get a prompt and it'll tell you have an order.
Yeah, but the only issue is if you have a trailing limited stop or limit stop and you hit and you for example you get distracted and you come back and you try to sell it quickly. If you're scalping, you gotta cancel that limit order stop, otherwise.
I don't think you have to worry, because if you're an auto send and you go and hit another order to like sell, and you already have orders for the limit stop and you actually have a trailing stop,
Okay.
then instead of automatically selling, the dialog box will pop up and it'll ask you, it will confirm with you that you already have orders. It gives you a dialog box.
Okay.
Yeah, so I mean, you can try that in paper trading, but it gives you a dialog box telling you have orders. So it's kind of really critiqued for traders that make a lot of mistakes, right? So yeah, it kind of captures most of those. I mean, there are times something can happen, but I've had a few things happen, and every single time I've had something happen that shouldn't happen. Like one time I had my order in, okay, and literally the bid and ask went right through, and my order sitting right there, okay.
Wow.
And so I went ahead and I called them and I said, hey, my order's in. And they can go in and see the order. They can actually see the order and it didn't fill. And they'll fill it at my price, right? Or, they'll ask, is there something that they want, can I give you 50 free trades or some crap like that? So I've had to call TD Ameritrade a few times. Why the fuck didn't my order fill? I mean, literally, I've come unglued on it, because, when you put the work in, like sometimes I have hours into a specific trade. I mean, sometimes I have a lot of work involved with a specific pattern or trade that I've been working on, and all of a sudden that opportunity comes up, and I've been waiting for months for that opportunity, and all of a sudden I put my order in for 50 contracts, and I'm buying 50 contracts at $450 each, and all of a sudden it goes right past and I don't fill. Yeah, it's infuriating. And so I call them, and you know what? Typically I just tell them, fill me at my price, and then they actually put the order in, and then all of a sudden, while I'm on the phone, all of a sudden you'll see the blue bar pop up with my order in there. So they've done it many times, and it's their problem. But don't let it go, because these things happen with them. Yeah, they'll help you. They really will. They really go out of their way to help you. And I don't, those are just some flukes that happen because remember, the servers, they have multiple servers, numerous servers handling the throughput. And then when one server comes online, the other server passes the workload. And, you know how things just tend to happen with computers, and everybody says bad information in, bad information out. Now, a lot of these things are running on RAID systems, and there's all kinds of other issues going on.
Okay.
Yeah, cancel will cancel any existing order, and flatten will execute any order, okay, or get you out of. Let me back up. Cancel will cancel any existing orders that have not been filled, or even partial orders that have been filled. And flatten will cancel all orders and then get you out at market value what you're in on that, whatever you have up here on the ticker. When you hit flatten, it will cancel all other orders, and then it will enter on the market. Yeah. Now I will be honest with you. There are plenty of stock or things that you can trade market order. So if you're trading an ETF like GLD, or you're trading a SPY, because there's usually no there's only 1 cent between the bid and the ask. So, you know, if the bid is here and the ask is here, you don't need to hit that. You can just do a market order if you want. So if you're going to trade like you're going to trade those types of ETFs and only those ETFs, go ahead and leave the market order button here, because you can